Hello everyone, and welcome to another video in which I'm going to talk about the options. I'm also going to explain how, despite being bullish, I managed not to generate much losses, riding Bitcoin down from 8k to around 3k. As always, remember to open a new account on Bitmex, Deribit and/or crypto facilities with my referral link, which you will find below. That link will give you 10 to 20% trading fee discount, and I will get a tiny fraction of this for referring you. So I will not explain the details of how options work. You can find that in many videos available online. I might record one of these videos in the future. Essentially, options allow you to buy an opportunity. So they are fairly complex trading instruments, and by buying an option, you buy an opportunity to either buy if you're buying a call option or sell if you're buying a put option. You get an opportunity to buy or sell Bitcoin at a specific price at a specific point in time. So for example, by buying this option here, you would be buying an opportunity to buy Bitcoin at $5,000 on 29th of March 2019 for 99, and for that privilege, for that opportunity, you are paying $99. So not talking much about the options, I'll tell you what I think about what Deribit offers. So an important thing to know is to realize the time decay of the options. So essentially, options tend to lose their value over time because you pay for the opportunity to buy and sell the option. And the longer expiry the option is, the more expensive the option is. So the decay, for example, for 3.5k option here, which is called theta, is $13. So that's a 3.5k call option. So every day you're paying $13 for privilege of having that option. While if you buy an option which expires in September 2019, the theta is 1.5. So every day at the moment you are paying $1.5. Now towards the expiry, this will speed up, and within days of the expiry, that theta will be 13 or so dollars every day. So in my view, these options will be fairly expensive while these options will be rather inexpensive. Overall, in the current bear market, the put options I find quite expensive, while the call options are not that expensive. So if I am to recommend buying something, I would recommend buying call options expiring in June or in September. The September ones are quite illiquid at the moment, but the June ones are quite liquid. Now, if you are to sell some options, I would recommend selling put options here with very short expiry, or if you really have to sell a call option, then I would recommend selling a call option here, or maybe here, but these short expiry options. Now I will show you a trade which makes money if Bitcoin becomes volatile, but loses money if Bitcoin stays the way it is. Now I think it is highly unlikely that the Bitcoin stays at 3.5k until late September 2019. This is why I think it's a decent idea to buy volatility even at this point. Like, I already have purchased some volatility at much higher prices. So if it goes up, I will benefit from those options which have not expired yet. So let's show a hypothetical scenario. Let's say Bitcoin is 3.5k and you buy 2 options expiring on the 27th of September 2019 at a strike price of 4,000. Let's pretend that this this delta is 0.5, and buying this call option, so paying $600 for an opportunity to buy Bitcoin at 1 Bitcoin at 4,000 in September, you are paying $600. If you buy 2 of these options, looking at the delta, it is considered to be an equivalent of being long 1 Bitcoin at this moment in time and at this price and with the current volatility. Now my trade will be delta neutral, and that means that you are delta long on Deribit Options 1 Bitcoin, and you want to get 1 Bitcoin short exposure somewhere else. So you can go to Bitmex and you can sell 1 Bitcoin by selling 3,500 contracts, or if you own some Bitcoins, you can just go to an exchange and sell them, and sell 1 of them. And now from looking at the price movements, we'll see whether we have benefited or not, considering that we own 2 of these options and that we have shorted 1 Bitcoin. So let's say price goes to 6K. Then each of these options makes us $2,000. They did cost $600 each, so you have made $2,800 on the call options. Now you have shorted Bitcoin at 3.5K, so when it goes to 6K, you have lost 2.5K. So overall you have earned $300 on this trade if Bitcoin goes to $6,000. That is not much, but if Bitcoin ever goes to $10,000 ever by 27th of September, then the profit from this trade will be $6,000 from each of these options minus cost, so that's 10.8K, and you have lost 6.5K here by shorting 1 Bitcoin. So overall this trade will give you 4.3K profit if Bitcoin goes to 10K by 27th of September. That will be a really decent gain. Now let's say that Bitcoin goes down to 2K. So from shorting Bitcoin you make 1.5K, and then these options did cost you 1.2K, so you have made again $300 if Bitcoin goes down to 2K. Now again, this is not much, but if Bitcoin goes down to 1K, then you have made 2.5K by shorting 1 Bitcoin, and you don't lose any more than you have spent on these options. So you lose 1.2K, you profit 2.5K, so you have gained $1.3 thousand. And you can obviously buy and sell more of this stuff. So this is my my idea of buying volatility. Now if Bitcoin becomes bullish, it might be more profitable to buy put options and then buy physical Bitcoin. That way you will be short, you have your short exposure on options and then long exposure somewhere else, but at the moment in the bear market it's cheaper to buy call options. What else about the options? They are very liquid products. You can have a look here. So the spread is $10 between buy and sell, and that's 25%. So a spread of 25%, that is really a lot. It goes down on some more liquid products, so let's go to maybe this should be very liquid around the in-money price. So here it's only $16, but still overall these are really high spreads, and you don't want to buy and sell options all the time. If you really want to trade options, you should buy an option and then probably hold it till expiry. You may want to sell it fairly short before expiry to avoid this rapid time decay, but I don't think it is always profitable. So keep that in mind, that the decay is very steep towards the expiry, and consider selling them. But when they are so liquid, it can be difficult to sell them. Like if you are paying 25% of the price of the option for the privilege of trading it, it's probably not worth it. Now there are some ways of helping you with being the maker rather than taker on a trade. You can look at the complex order form and try to do an implied volatility trade, but that doesn't always work as intended, and someone can manipulate the price of the underlying futures and you will get screwed. Or when the price changes, the implied volatility changes as well. So you may put an accurate price for now, but after some volatile move up or down, the implied volatility that you have selected is no longer a good opportunity. So that is essentially it. Oh, an important thing, if you want to open decent sized positions and if you want to offset your options with some futures, or if you want to have long and short exposure, so for example buy some call options and then buy some put options, ask Deribit for portfolio margin. It allows you to just buy more options with your leverage, and if you are trading in opposite directions, that will kind of neutralize the delta and allow you to buy more or sell more actually. So I think that is all I wanted to say about the Deribit options. As always, remember to open a new account on Bitmex, Deribit and or crypto facilities with my referral link. That link will give you 10 to 25% trading fee discount, and I will get a tiny proportion of that for referring you. Thank you very much for your attention. Now, one thing that I forgot to add is that when you purchase 2 call options with strike at $4,000 expiring in September and sell 1 Bitcoin, you not only make money when it goes up or when it goes down to a specific level, you can make money if it goes down and then it goes up. So let's say Bitcoin goes down to 1k, you have made 1,000 odd dollars from that move, and when you decide to neutralize your delta, so your delta from this option will probably be 0, so you have shorted Bitcoin, you went long this option. So if at 1k you decide that you flatten your delta, you still keep your option, which is almost worthless, and then Bitcoin goes up, you will make a lot of money. So you not only make money from Bitcoin going extremely down or extremely up, you can make money from it going down and then up and then down and then up. If every time that it goes up a lot you neutralize your delta and then it goes down and you neutralize your delta there, you can make more money than from one extreme move. You may also make money if it doesn't make any extreme moves. So every time it goes up, like if it goes down to 4.5k, you flatten your delta, then it goes to 2k, then you flatten your delta again, and then it goes up to 4k again, and you flatten your delta again there. If it does that several times by 27th of September, you may still make money. Thank you again for watching.